Hello and welcome back to our weekly Market Insights series brought to you from the Capital Markets Trading Desk here at SunWest Mortgage Company. So let's get started. Markets edged higher this week after the U.S. Court of International Trade deemed most of the president's global tariffs illegal. The court ordered the challenged tariff orders to be vacated, indicating the president had overstepped his authority. Stocks also received a boost from a strong earnings report by the chipmaker NVIDIA. The major U.S. indexes are on track to close both the week and the month with gains. Treasuries climbed as well, following a period of volatility earlier in the week. Minutes from the Federal Open Market Committee's May 7th meeting released on Wednesday revealed that Federal Reserve officials broadly agreed heightened economic uncertainty justified a patient approach to interest rate adjustments. They expressed concern about tariff-driven inflation and rising unemployment, a scenario that could force the committee to choose between tightening monetary policy to curb inflation or lowering rates to support growth and employment. The U.S. economy contracted by 0.2% in the first quarter of the year, according to the second estimate from the Bureau of Economic Analysis. While still reflecting a slowdown, the revised figure was slightly better than the initial estimate of a 0.3% decline. The contraction was driven by a surge in imports and reduced government spending. Consumer spending rose by 1.2%, down from a previously estimated 1.8%, marking the weakest growth in household outlays since the second quarter of 2023. The U.S. Census Bureau reported Tuesday that durable goods orders fell by 6.3% or $19.9 billion in April to $296 billion, following four consecutive monthly increases, including a 7.6% gain in March. The drop was driven by a 17% decline in transportation equipment orders, which fell to $98.8 billion. Excluding transportation, orders increased 0.2%, indicating continued caution among businesses after stockpiling ahead of anticipated tariffs. U.S. consumer confidence rebounded sharply in May as views of the economy and the labor market improved. The Conference Board's index rose 12.3 points to 98, the largest monthly gain in 4 years following 5 straight months of declines. The Present Situation Index increased 4.8 points to 135.9, while the Expectations Index jumped 17.4 points to 72.8, but still below the 80 thresholds typically associated with recession signals. Much of the renewed optimism stemmed from the temporary tariff reduction agreement between the U.S. and China. According to the U.S. Federal Housing House Price Index, U.S. home prices rose 4% between the first quarter of 2024 and the first quarter of this year. On a quarterly basis, prices increased 0.7% from the fourth quarter of 2024. However, monthly prices edged down 0.1% from February. Despite recent monthly fluctuations, the U.S. housing market has recorded positive annual appreciation in every quarter since 2012. The National Association of Realtors reported that pending sales of previously owned homes plunged by 6.3% to 71.3 in April. The figures were the biggest drop since September 2022. All 4 U.S. regions experienced month-over-month losses in transactions. Year-over-year, pending transactions retracted by 2.5%. The disappointing figures suggest the resale market is dragging as prices remain at record levels and mortgage rates linger close to 7%. MBA mortgage applications fell by 1.2% during the week ending May 23rd. This follows a 5.1% decrease in overall activity in the week ending May 16th. As mortgage rates increased, a sharp decline in refinancing activity overshadowed a slight increase in purchases. Applications for refinancing loans fell by 7% from the previous week, but were still 37% higher annually. Purchase contracts increased by 3% week to week and were up by 2% compared to the same week last year. Mortgage rates reached their highest level since January during the span, as the average 30-year fixed rate climbed to 6.98%. The number of Americans who filed for initial unemployment benefits rose more than expected for the week ending May 24th. Initial jobless claims rose substantially after climbing to 240,000. Economists have forecasted a 230,000 increase. Meanwhile, insured jobless claims reached their highest level since November 13, 2021. Continuing claims jumped by 26,000 to reach 1.9 million during the week ending May 17th. The rise in both initial and continuing jobless claims suggests that the labor market may be experiencing some turbulence with increased layoffs and greater challenges in finding new employment after being laid off. And that's it for the week. As always, stay locked in so you stay current on market news. Also, if you like this video, please hit the like button and share, subscribe, but also hit that notification bell so you know when we upload a new video. My hope is to always keep you in the know of the latest world news and, of course, our pricing incentives. Get out and enjoy this beautiful day. Have a great weekend, everyone. Buffy, out.